So I got a question from someone regarding how to read a 15-minute chart. And it must be, not that it's a matter of must be new or must not be new, but I kind of wanted to address the subject if possible. So my thing is that with charts, it's all, you should read them all the same regardless of what the time frame is. So you can see that this is this is breaking out above these previous highs, and it might be a retrace, and you got to see if this now becomes, because what was previously resistance now becomes support. So if it does get a retracement to back to this line, will it shoot back up? Now, if I do another one, let's say I do a quarterly, um, and that last one was the monthly. So it could have been a 15-minute chart, it could have been a 1-minute chart. But my point is you kind of just read them the same. So this is a quarterly of the Dow Jones, and you can see this prior level of a 14,190 was broken and is continuing. The volume is going down a little bit, but the price action is moving up. So to me, there's only two big important things: price action and volume. The volume, sometimes, if it breaks out and it's a false breakout, or if it breaks down a high volume, or it breaks down a kind of lowish volume, because there was a breakout. This breakout right here was pretty much the first quarter. No one believed it. It was probably the most hated breakout of that I've seen in a while, and it kept going up. So if you said the volume wasn't right, you haven't traded yet. And that's the thing that the price is what price pays in a weird way. I mean, the volume, if you have great volume but the price doesn't move or barely moves, your broker really doesn't say, well, guess what? It moved up, but the volume was kind of light, so we're going to give you half of what we should have gave you. That never really happened. So if you go back and break it down to, let's look at this, a 5-minute, but if I did this and told you it was a daily, would you treat it any differently? You would look and say, okay, I got some higher lows in place. Maybe I have this channel that I got going on right here, and I want to really see what's going on, if it broke through it, and if it's going to continue to the downside, break down. Some might call this a rising wedge, because this is coming down a little bit, and this kind of could squeeze a little bit as well if it breaks the rising wedge or falling wedge. But again, I didn't want to get too much in the weeds, but to read a 15-minute chart, and these are just very basic, moving averages. I really don't try to pollute the chart too much, because it ends up making me second guess a lot of things that I shouldn't. There's an elegance in simplicity, if you want to kind of put it like that. And I find that every trader that I've talked to has kind of the same circle that they start off really simple because they're trying to learn things, and then they see these charting packages come with hundreds of indicators, and you end up putting as many indicators as you can because you're trying to get the perfect edge. And then one day you realize, let me go back to what I was doing before. Price action, I do like candlesticks, bearish engulfing patterns. I like bullish engulfing patterns, I like shooting stars if they have volume, but that doesn't. I like hammers. I like dark cloud cover piercing. These are things that I will actually try to see if I could post some examples of today. But to read a 5 or 15 or hourly or yearly is all the same thing, because if I gave you a yearly chart, this is a yearly chart. This is a hammer. You had a hammer from 09, and it's pretty much been going up and broke this previous high. But if I didn't tell you this was a yearly and I told you it was a 15-minute, you would say, okay, well, we could break out to high highs. But you also have to be very cautious to say, you know what, this volume is going down, but the price is still going up, and I just need to be aware of it. That doesn't mean that I stop trading. That doesn't mean that I can't move on, but I just need to be aware of it. So if the person, and I'll send this to them, pretty much let me know if this answers your questions. I have no problem answering questions and doing videos for people that ask me questions about particular stocks or about particular, some type of concepts. I will say that I would focus first on learning how to read the charts, but mostly how to understand multiple time frames. And the time frame that I just showed you, the yearly, that shows you as an uptrend. Then you could go down to a monthly. That's showing you that, listen, we have a shooting star. We need to break above it because this could be a start of something going down. We had an engulfing pattern previously. And you can look up a lot of stuff from Steve Neeson. And he has a lot of videos on YouTube as well, so you could use those as a reference point and kind of just look at them, and you'll start getting the. And then he has some books as well. Tina Logan has a good book on candlestick charting that I would recommend if you guys have the chance to pick up that book. But again, if you look at that, but then you look at the monthly, and then you look at the, a 30-minute. If I didn't tell you it was a 30-minute, you could treat. What happened if this was the monthly? What would you do? And that's the thing. The time frame to me is the bigger portion, because let's say you look at the monthly, weekly, daily. If you're swing trading, the monthly is going to be the ocean current. The weekly is going to be the wave, and the daily is going to be the ripple, and then everything below is. But these things will move. The rising tide will raise all ships. So you don't want to look at the weekly and then see it's an uptrend, but then see a slight retracement on the daily and say, I'm going to go short. Because my thing is, why short the bigger trend? So looking at the Dow right now, I know we're in very uncertain times, unfortunately, with what's going on. So you can see the weekly, it's pretty much been in this range right here for a while. You can see if I just break this down like this, you can see that it's pretty much been in this, what is this, 1568, 800, it's been in that range, but this is a big range. You can still trade this range. And if you get to, the daily, you can see the range even more. This is stuff that, you'll be able to see. And it might be frustrating at some points, but you could swing trade this for sure. But if this was the 5-minute, you should be able to look at it. It all depends on what time frame and what you're looking to do. But remember, there's a lot of ways to skin a cat. So there's a bunch of different things that you could do, different trades that you could do. You could use options. You could use buy regular stock. Cover calls. You could do spreads. But that's a whole different story. But again, the multiple time frame is the biggest thing to me in understanding which to look from the top down. I call it the top down analysis. And I'm not going to look at the 5-minute before I look at the weekly and the daily. It just, you want to see the big picture. It's like you want to build a house, right? Like, so my thing is, before you say, let's start swinging hammers, you'll say, well, what kind of house do you want? How big is the house? What kind of land do you have? Is that feasible? What's your budget? And kind of go from there. So, again, if you have any additional questions, feel free to, comment down here in YouTube, or you can shoot me an email at MaximusAnalysis@gmail.com, and I'll get you up something. All right, take care. Hope this helps, and trade them well.